Hello, today I'm delighted to be joined by Ross Beaty, Chairman of Equinox Gold and also Chairman Emeritus and founder of Pan American Silver. Delighted to have you with us again, Ross.
Thank you very much, Andrew. Good to be here.
Hey, great stuff. So Ross, let's start with a question. How bullish are you on gold at the moment?
Well, it's no secret for most people who have heard me speak about gold before that I'm very bullish on gold. I've been bullish, quite frankly, for 4 or 5 years now, and I'm as bullish today as I've ever been. I just don't see any reason why gold shouldn't outperform major markets going forward. The stars are lined up for continuing strong run in gold, and I just don't see anything on the horizon, despite a lot of noise about the direction of 10-year treasuries and inflation prospects being negative, and all the noise and all the talking that is being done by the US Fed, for example. All they're trying to do is play down the fundamental conditions for gold, and they just can't do it. So I'm very bullish on gold. That's a long answer to a simple question.
Yeah, I mean, it kind of feels like the gold market is waiting for something to happen. I mean, what's needed for gold to go and rally as we come into 2022?
I agree with that completely. And I have to confess at being surprised that gold hasn't actually done better than it has done. You have conditions today where governments all over the world are sort of simultaneously devaluing paper currencies, fiat currencies. Inflation is rising everywhere in the world. The stock market is an all-time high. Bond markets are almost at an all-time high. These conditions don't last for long. And when they crack badly. Gold is always a beneficiary. Gold is always inversely proportional to, for example, the US dollar, the major markets. And so when they crack, that's when I think gold is going to have a happy time. It's actually doing pretty well. If you think about all of the negative rhetoric out there, it's doing pretty well. The US dollar is very, very strong right now and has been for the last number of years. Yet gold has performed very well. That's traditionally not the case. So gold is doing well despite all of these sort of pressures against it. When I see major markets cracking significantly, when I see the US dollar cracking, when I see people actually accepting that we really do have long-term inflation as opposed to the so-called transitory inflation, which is nonsense in my opinion, then you're going to see gold have a lovely run. It'll break through its previous highs, and I think it'll chart new territories. How high, I don't know, but I expect it'll happen relatively soon.
Do you think that tapering the QE stimulus is still on the table?
Tapering QE is going to be very difficult. They'll do it for sure. They'll do it, but they're going to have to buffer it with other fiscal and monetary tricks. I just don't see how the Fed is going to get out of the hole they've dug themselves with this easy money, interest-free economic juice that they've provided. I don't see how they're going to get out of it. I actually don't know how it's going to end, but I'm quite sure wherever it goes, it's going to be good for gold.
Okay, let's move on to some of the other commodities that you're particularly keen on. I mentioned at the start that you're now Chairman Emeritus of Pan American Silver. What about silver?
Sure. Well, silver, of course, is that schizophrenic metal that is half in a precious metal camp like gold, and it's half in a base metal camp like copper and aluminum and so on. So the prospects for silver are fantastic if you assume that the world economies are going to continue to grow and grow and grow, because silver's industrial uses will continue to be strong, while at the same time, silver, if you're bullish on gold, generally you're going to be even more bullish on silver because it's a much thinner metal and it tends to trade more dramatically or with more leverage when gold runs. So silver kind of could be in the best of both camps and outperform everything. But if you're bearish on the outlook for global economies going forward, then you can't be as bullish on silver as you could be, say, for gold. By the same token, if you don't think that that my argument for gold is valid, but you're very bullish on the industrial metals, again, silver will actually outperform gold, and gold won't do as well as most other metals. I mean, that's just how things work in an environment where you've got these two camps. You've got a gold camp with its own fundamentals, and you've got kind of a base metal camp with its own fundamentals, or broader commodity, industrial commodities, say. Silver is a thinly traded metal, so a little money into silver or out of silver makes a big difference in sort of how it trades. So if there's a market where, you know, the sentiment is good for silver, silver could outperform everything and do very well. And the reverse is true too. Broadly speaking, I'm bullish on silver, I'm bullish on gold, and actually I'm bullish on a number of the you could say the electricity transition base metals like copper and even aluminum and nickel and those kind of metals.
Yeah. In terms of just actually just sort of like digging down a bit on the you can have like mentioned the energy transition and slightly sort of like turning our sort of like attention to some of the companies that you're involved in. The green economy and ESG is a big investment theme at the moment. How do you approach it from Equinox Gold?
Well, Equinox Gold, you know, there's two things. There's the energy transition, and gold isn't really a big part of that, quite frankly. Silver is a huge part of it. Silver's biggest use right now is in photovoltaic cells, so, and of course as the best conductor of electricity. So silver is absolutely in that camp. So is copper. Gold is not. Gold is too expensive to be used as an industrial metal, and it's just there as a monetary metal, as an alternative to paper, as an alternative, just as a fundamental hard asset. For people who want to have another form of money in the form of gold and have that insurance and that reserve base, something that's outperformed all other paper currency for 5,000 years. That's the role of gold today. It doesn't have a big role in the energy transition the way these other metals do.
Okay, but I mean, from an ESG investor's perspective, you must increasingly have investors who are coming to meet Equinox Gold and asking about what are Equinox Gold's ESG criteria. I mean, how do you kind of answer that sort of particular question?
Well, that's a different question. I was mentioning the kind of the ESG or the energy transition question for metals per se.
Okay.
Really, for all companies, especially public companies that have visibility to global investors, for all public companies, you know, ESG is today a dominant theme. They've got to do better looking after the environment. They've got to do better looking after the social connections, and they've also got to do better with respect to diversity, inclusion, all those things that speak to governance. And Equinox Gold is I would say in the top league of those companies that are looking after that kind of stuff. You know, Equinox Gold now is a big gold producer. Equinox is going to produce about 600,000 ounces of gold this year. It's on track to produce about 1.2 million ounces of gold in a few years. It has incredible internal growth, probably the best growth of any gold company on the planet. Mm-hmm. So the ESG platform is fundamental to what we do in Latin America, in the United States, in Canada, with respect to dealing with our local communities, trying to make the very best environmental footprint we can. You know, doing all sorts of innovations in how we use water, how we use reagents, how we deal with employment, how we have local people employed, lots of women on our board. All that stuff is very important to us, and we're really walking the talk, I think. It's not just lip service, we're actually doing it, and we've published a sustainability report now for the first time. We've put a lot of attention to it, as all good companies do. The more you look after that stuff, the better you do on the balance sheet, the better you do with investors, and you should outperform if you have a good ESG performance.
Mm-hmm. You mentioned in answer to your previous question about your sort of increase in production. I think I saw a news report a few weeks ago saying you had a 73% increase in mineral reserves. What other sort of like news would you like to highlight to investors listening in about Equinox Gold?
Sure, thanks, Andrew. I mean, Equinox Gold was built just a few years ago. A few of us got together and we decided, you know, I wanted to sort of have my last company and name it after my first company, Equinox Resources, that I founded back in 1985, a few years ago, mm-hmm. and really go big and try to build a company that would respond to investors' needs today, mm-hmm. Which means large scale, great balance sheet, great huge gold reserves and resources, because to get leverage to gold, you need big production and you need big gold reserves and resources on your balance sheet. And we've done that. In 3 short years, we built this great base of assets. We have 7 mines in Brazil, Mexico, United States, and now we're developing a new one in Canada. We've got this great growth profile, as I outlined. And I think we're going to ultimately, just in a very few years, we're going to be a giant dividend producer once we stop putting our capital back into growth and start harvesting the assets that we've got. For me, it's been a very happy story because we've really executed well. We've got a great team of people doing this work. I think we've got 6,000 employees now in the 4 countries we work in. It's been a very happy story for me, and I think we've generally got it right on building a gold company inside a gold bull market. I don't think we're done with that, as I've told you. I think we're still very much in the middle of the game on the gold market side. So, you know, to the extent we can build a huge gold, one of the world's great gold producers right now, we will benefit immensely when gold continues to have a good run in future years.
How did Equinox Gold deal with COVID-19?
We were affected by COVID-19 like every mining company in the world. We have developed big protocols of testing and isolating people who have COVID-19. We've lost a few people at our different operations, especially in Mexico and Brazil. It's been very tragic and very hard on local communities. I will say, though, that by and large, we've maintained operations in most places. You know, the gold mining industry and the mining industry generally was seen as an essential service. So what we had to do is we had to isolate people and do a ton of testing. And I think on the whole, it's been pretty successful. It's been a real scourge though in the industry. I can say with all the vaccinations that are going around now that we are in the latter stage of it. The latest variants are worrisome, but you know, we're definitely able to reduce the numbers of people getting sick, reduce the number of deaths by a long shot. And I think now we're in the sunset of this pandemic. That in the next few months, even 6 months, 9 months, I think we're going to see the tail end of it.
Looking ahead to 2022, you've been through a number of mining cycles. Is this a super cycle we're in?
Super cycle is a strange word. I wouldn't use the word super cycle. No, I mean if you're well, today is a little different. I was going to say if you're a buyer of say a thermal coal company, you certainly wouldn't call the last 5 years a super cycle. Yeah. You know, you've got to look at every commodity on its own merits. Copper is different than zinc, is different than lead, is different than nickel, is different than, you know, rare earth elements or aluminum, or every metal is different. Silver is different than gold. So you have to look at the demand and supply fundamentals of each metal. Yes, some metals are very strong today, like copper, and some metals are rather weaker. So it's really, I wouldn't call it a super cycle. I would call it, at the moment, there are certain metals that are really benefiting from things like the energy transition, like the bull market in precious metals, and some that aren't. For example, platinum and palladium, they've done extremely well, mostly due to the demand for catalytic converters. But that business is likely to sunset as people move to electric cars because we just don't need those anymore. So I wouldn't say those were great metals to be in going forward. Likewise, uranium for me, now lots of people have different views of this, but for me, uranium is not such a great metal because it's too expensive to produce electricity from nuclear power today. It's a great green form of electricity. It's just too expensive compared to the alternatives like solar and wind, particularly when coupled with battery technology. And that technology is advancing every single day. There's new developments. So, you know, there's winners and losers in all of these things. It's a kind of a strange market today. I mean, in the 2000s, there was for sure a super cycle. That was driven by secular, you know, one-off industrialization in China, moving people from farms to cities. That part is pretty well over. China is still using a lot of metals, but it's not as metal intensive as it was when it was building its infrastructure. Today, it's building its service businesses more. Yeah. And so I do see a shift in China demand. The rest of the world, you know, we could easily go into a kind of I personally think we could easily go into a stagflation where there isn't a lot of demand growth. And yet you have this inflationary push for all sorts of fundamental reasons. Too much free, cheap money around the world. That's to me the biggest driver. And then once you get to a kind of employment base where people either don't want to work or they don't want to work for low wages, all of a sudden you have wage creep. And that's going to juice inflation again. So I really see a strange future right now that I wouldn't call a super cycle. That's a long answer again to a simple question.
Okay. So in terms of to capitalize on this new cycle, let's just call it like a new cycle for argument's sake, Apart from buying shares in Equinox Gold and of course buying shares in Pan American Silver, what else should investors do to capitalize on this mining cycle?
You know, every single cycle that comes along, if you have a fundamental view that there's going to be rising prices or static prices in the future for metals, you know, the best place to invest is to take a diversified portfolio, buy some large producers that are safe, that won't have as much upside, but are safer, maybe produce decent dividends, have a pot of stocks in the middle that are solid companies with great growth prospects. And that's a company. The first camp would be, say, a Pan American Silver. Good dividend, lots of opportunities, but it's not going to double or triple as easily as a smaller company. The intermediate tier, like an Equinox right now, tremendous growth, great prospects, well run, good balance sheet. All of those things are good. You know, buy a couple of those, and then down market, pick up a bunch of these juniors that have established assets that are real, that are good looking, that have good prospects, that offer scale. In other words, large size potential. Pick up a few of those, and there's a bunch out there. Any good, you know, mining focused investment firm will be able to tell you a handful of them. Take a diversified portfolio, buy maybe a dozen or 10 of these companies, and you're going to do pretty well as long as the tide comes in, or at least stays where it is. Because if the tide goes out, if I'm wrong about my view of the future, you know, all ships will be left high and dry when the tide goes out, and you're not going to do well. But if you get your timing right, you pick the right companies, you should outperform any other investment you choose to make. That's the business we're in, especially if you get some of these really small companies that have great exploration prospects that will be, you know, potential 10 baggers. And again, there's a bunch out there that offer that potential. But don't put all your eggs in one basket. That's the basic rule of a high risk environment like the minerals business.
And what about mining technology companies? Because we are seeing, I guess, more and more innovation in mining technology. Would you ever sort of consider sort of diversifying, investing part of your portfolio in mining technology companies?
Well, I've done lots of that already, Andrew. I've bought things that, you know, could not only do well as businesses, but also change the game in certain respects for the whole industry. And there's a number of those, and they range from battery companies that are going to build batteries that can work for mining trucks, for example, ways to analyze rock at the face of a mine that you can get immediate answers on what its content is. So you can say that bucket's going to go to waste, or that's going to go to the ore pile. Things that are incrementally going to lower costs in the industry, those sort of things are going to do well. And there's a lot of companies working on those sort of things. They're not very exciting, quite frankly. They're much more boring than a you know, an exploration company that might drill a fantastic hole and convert a $100,000 drill hole into a $500 million discovery or $1 billion discovery. But they're solid, and there's been a number of them that have done well. Not just in the mining sector, but across the board in the sort of ESG sector, where you're actually benefiting the world while you're also looking to make money and in a profitable business. There's a bunch out there, and I've invested in lots of them.
And just one final question: when you are investing into a mining company, is it the geology you look at first, or is it the mining team and the management team?
Yeah, that's a very good question. I mean, the answer to that is both. You can have a fabulous team, you can have a bunch of geniuses, and if they're unlucky, they'll find nothing, and that's just the way the business works. By the same token, you can have an absolute idiot discover a mine that's worth hundreds of millions of billions of dollars. That also happens, unfortunately. But by and large, you need both. So I look at, to answer your question, I look first at the project. I look first at the deposit or the opportunity as an opportunity to have a large scale discovery, or the strategy of a company that makes sense in today's market, where they really understand what is important, what investors are going to buy. That's the first thing I look at. Without a good team, though, many great projects don't realize great value. So a good, strong team is really important too. And there's a number out there. I mean, Lucas Lundin has done this again and again. Bob Dickinson in his heyday did it again and again. Right now, Richard Warwick is doing it again and again. Today he's got Solaris. He's just had home run after home run in the last 10 years. So he's the kind of guy who can take a deposit, he can identify it as a good one, get into it in early days, and ultimately it almost always does really, really well, because he's got the financial capacity, he's got the business brains to have a happy ending or a happy outcome for investors, whereas a person who doesn't have that acumen may not. And so you really have to look at both.
Okay, excellent. Well, look, I think we're out of time. Ross, it's always a pleasure having you on Minds and Money. And once again, that was Ross Beaty, Chairman Emeritus of Pan American Silver, and also Chairman of Equinox Gold. Thank you very much for your time, Ross.
Thank you very much, Andrew. I appreciate the honor to be with you today.